Uh, it kind of takes away the two sub limits that were there in the
Sure.
whole entire foreign holding limit. So I think it just makes the process simpler. It makes it more flexible, and therefore just increases the possibility of participation of foreign investors even more. Of course, ICICI Bank always had the specific approval in this regard, but now it just opens it up for various other banks and makes the process much more flexible.
So even in the case of ICICI Bank, I think foreign investors own about 67.3%,
Currently.
combination of investors. Do you see appetite for more foreign capital?
Yes, clearly, because the limit is 74%. Yeah.
Right. Let's talk about the macro picture as well. And the last time as well, we spoke about it, the investment cycle during the budget day. I remember we spoke. Are you disappointed by the fact that the investment cycle has still not turned? It's been 17 months of this government. Everybody in corporate India thought it would have happened by now. Why, according to you, has it still not turned?
Uh, Again, I would say two things. One is that we should understand why the private sector investment cycle has not picked up, and the second is we should not make too much about it, because there are other things that are happening that can actually kickstart the economy and are kickstarting the economy. I think as far as the private sector is concerned, currently a lot of their cash flows are tied up in projects that have just got completed or getting completed. And till the time these projects generate cash flows, the debt on these projects has already been taken. So till the time these projects generate cash flows, you will have less scope for them to start investing in the new projects. So we have to wait for these projects to clearly start generating cash flows. But in the meanwhile, as I said, a lot has happened on the macroeconomic side, whether it's current account deficit, fiscal deficit, inflation control, interest rates. That's one part. The second is really on factors that are churning the economy, whether it's coal production, whether it's giving out of mining licenses, whether it's the whole push behind roads and highways, the likelihood of railways and defense now kicking in. And I think this is what is churning the economy currently, and then it should be followed by private sector investment as those issues get sorted out.
So in your view, are we still what, 12 months away from private sector investment revival?
I think so, yes.
At least 12 months.
Yes, about 12 months away.
Right.
Yes.
But also the mood of corporate India, Ms. Kochhar, there was a sense of euphoria. I think now there's cautious optimism. We haven't seen a revival in corporate earnings as well. They're still lagging. Brokerages now believe we are probably 3-4 quarters before we see a revival in corporate earnings. I'm talking about corporate India in general, not ICICI Bank in particular. Do you think now people are more cautiously optimistic about the pace of reforms that we've seen over the last 17 months?
No, I think we must remember that, whether we look at, it's not just about India, when we look at even globally, times are very challenging, and one cannot deny the fact that commodity prices are so low, and in fact my belief is that they will continue to be low for some time to come. The financial markets keep being very volatile. Now all these things do impact the overall economic activity, and the mood of the industrial sector, I think, moves on account of various such factors. So it's not to say that work has not got done. I think a lot of work has got done, but at the same time, yes, even the global scenario is such that one has to be just cautiously optimistic about everything.
What will also help change mood is another slew of rate cuts. We've seen some move on that front, and I'm not saying that a rate cut will revive the investment cycle, but that will probably help aid the mood as well. How much elbow room do you think there is for the RBI to cut rates in this fiscal year?
Yeah, I think as far as RBI is concerned, they've done 125 basis points. They said very clearly they've kind of front loaded some amount of that cut, but I still think there's a elbow room for another about 25 basis points up to this fiscal year. But that's the RBI monetary policy. I think as far as the bank lending rates are concerned, you would see a little bit reduction even before any next monetary policy reduction, because the cost of funds for the banks continue to come down.
And by how much would this
so
reduction be?
That of course is going to be every bank's
will have its
ALCO's
meeting.
decisions. Yeah, but you would see that rate cut irrespective of whether the monetary policy rates get cut.
So this is likely to happen even before the next policy in December, you're saying? Sure. But do you think the other issue that the governor will also have to keep in mind is a Fed action? And there is some amount of uncertainty. Now markets are beginning to price in a likely Fed rate hike in December itself. Will that also weigh on our mind, and how prepared are we to tackle the volatility that will come on account of a Fed rate hike?
Well, I think the Fed rate hike now has been expected for long. So in that sense, it's not going to catch the market by surprise. And also, if you look at India's macroeconomic conditions, I think we are actually much better placed than any other country in terms of our foreign exchange situation is concerned. If you look at our reserves are at very comfortable position. We cover substantial number of months of imports. Not just that, even when you look at our currency, it's performed much better compared to most other currencies in the world. Whether you look at it in the last 3 months or the last 1 year as a whole, I think comparatively we are in a much more stable position.
Let's talk about ICICI Bank as well, Ms. Kochhar. While you have mentioned that FY16 total additions to recast assets and slippages are likely to be lower than FY15, how confident are you of achieving this, especially given the number that was reported in Q2? How confident are you of achieving this?
Well, as of now, I think we are continuing to move in that direction itself. Of course, this is all pinned on the basis of certain assumptions that recovery will happen at a certain pace. Some of the executive decisions around large projects will come at a certain pace. But I don't have a reason to believe that that will not happen. So I think, given the way I see the situation currently, we are still in the same direction as I have mentioned earlier.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.